They say you can't accurately predict the future, but that shouldn't stop you from being prepared for it. Well, at least financially anyway. Fortunately for us and for you, we've been invited to this year's Economic Outlook and Investment Strategy event by Cirrus Capital. The event gathers some of the best and the brightest economic and financial minds, so you know we won't miss the opportunity to ask them what they expect from the Namibian economy in 2024. And who knows, they might give us a tip or two about where to invest our money in the coming year. Let's go.
And I'm Kenny's favorite local economist.
Favorite international as well. Like bit of context. I mean, we're at a Cirrus event. You don't want to add a little bit of context there.
Yeah, so I founded Cirrus with my colleague Renee Mostert, and we're hosting an event this evening in the rain to talk about the economic outlook for the country and some investment strategy around that. I think what we're seeing at the moment is basically a move from a contractionary economic environment into now an expansionary environment, but it's classic early phase expansion. So we're seeing, the very, very early stages of economic recovery. So it's largely investment driven, as it usually is in early phase expansion. That investment's primarily in the mining industry, so both onshore mining, diamond mining, and oil and gas exploration, hopefully moving into production going forward. And that's really going to be the theme, I think, for the next year or so. Unfortunately, early phase expansion is not something that the layman really feels in their pocket. It's little sparks of positive light around the country. If you're working in the uranium industry, if you're working in oil and gas, these sorts of things, you may start to feel some uplift. But that's not the case for the majority of people.
Yeah.
Usually what happens is you have early phase expansion, that takes 2 or 3 years, and then you start to move into a later phase of expansion. And with that movement, that's when you start to see big growth in household incomes, the lot of the ordinary man improving and so on. We're still a little bit away from that, but at least we've kind of turned the corner on the contractions and things are slowly starting to look better.
I'm Pandu Shaduka. I'm a fixed income analyst at Cirrus Capital. I recently joined last year in July, coming from Momentum Advisors in New York, and finally good to be back home. To be perfectly fair, I'd also love to know where to park my money in 2024. But realistically, here we're sitting in a period where we have elevated rates, and we've had that for quite an extended amount of time. Lots of market expectations are seeing rates being cut towards the end of the year, throughout the year, but we're estimating towards the end of the year, if not next year, early next year. So kind of knowing that the trajectory of where rates are going to go, you want to know the destination as opposed to the journey. Right? You don't want to pace things, you don't want to time when something's at the bottom and something's at the top. So kind of we anticipate, or we want people to be taking their money out of long cash and going into the short end of fixed income. There's some really, really attractive equities in Namibia. If I'm allowed to name them, I'll name them.
Hey bro, I want you to name them, but again, this isn't financial advice. I'd be interested into just
if you get a chance to speak with Amy, I think she's going to tell you that CGP looks extremely valuable at this price.
And just for those who
Capricorn P look really attractive at this price. FMB ran hot last year, but as a value play, it still offers quite an attractive dividend yield there. And then on the fixed income side of things, which is my specialty here, the short end of the fixed income curve looks attractive. That GC 2060 to the GC 30, being able to yield around 9.3 to 9.5% over the next 2-3 years.
Yeah.
That offers you value. That's a space where you can take money out of your savings account, where you're earning whatever savings core account is earning at the minute, and you can get your 9.5% locked right in before that conversion goes back to the normal interest rate environment.
But Robert McGregor, I'm an economist by training. I also oversee the research team at Cirrus here in Windhoek, and I've been with the company 6.5 years now. I think growth is one of them. So we've come from a period of very low growth for the last couple of years. So my view is that we are in a higher growth period. We've got a lot more to see that growth come through. I think there'll be volatility with what's happening in the oil and gas space. Creates a big base, slows down, so it becomes a bit complicated. But I think compared to the region, we're in a much better position medium and long term. And tied into that is obviously oil and gas. I think you can't talk about Namibia these days without oil and gas.
Yeah.
Obviously it depends on sort of a lot of the technicalities. Is it really commercially viable? Do we have a regulatory regime that allows them to go forward with it?
Yeah.
And if yes, I don't think we'll recognize this country in 5 to 10 years. If not, I still think we're in an all right position, but it just won't be as good as it could be. And then the other one, I guess, is just interest rates, because I think we've got a slightly different view to what the market has, and that ties into inflation. We think inflation will be a bit higher than what the market currently expects, because we've got wage adjustments coming through, growth coming through. I think globally there's a bit more pressure on inflation than I think the market seems to believe. In our view, that just means we don't see interest rates changing in Namibia this year.
Hi, I'm Amy Waters. I'm an analyst at Cirrus Capital. I used to be a fixed income trader and doing fixed income research. It's still my primary passion, but I've decided that I need to also understand how equities work. Thanks. I think it's a question a lot of people ask, and for some reason this year specifically a lot more people have been asking me that.
Yeah.
But I must make a disclaimer that I can't give financial advice, and I'm not here to give financial advice, but I can provide information, and that's for the person to decide. And the reason for this is because different people have different circumstances and have different risk appetites. And depending on that, you need to make a decision of with what level of risk you're comfortable with. So I always like using this pyramid structure where you start with your most least risky and you build up into it. And at that bottom part is money market. You should never put your money in a commercial bank, because the rates that the banks give you on deposits is criminal. They give you about 2%, 3%. So you would always want to opt to at least go for money market. You can go for unit trust type of money market funds, or you can just decide, different stock brokers offer money market services, and the rate that you get there is more or less around 8% currently because of interest rates being high, but that fluctuates with what the repo rate does, and that's also why the repo rate is so important. And then you get equities.
My favorite.
And equities is where it gets interesting, because as you saw in our presentation that you can, like for example, Standard Bank was trading at 450 last year, and it ended up around 850. So with stocks you can get two forms of returns there, with bonds too, but with equity the capital appreciation can be much more aggressive than with bonds.
Yeah. And there you have it. As always, Foster Digital Education is the #1 platform for financial, economic, and social information in ways that you understand it. To keep supporting our platforms, share the video, like the video, and as always, remember, learn, connect, grow.